Very good evening, viewers. I am presenting here one final account problem of a sole proprietor where trading account, profit and loss account and balance sheet are to be prepared. Question is on the screen regarding final account problem. The following figures are extracted from the books of Mr. Ram. You are required to prepare trading account and profit and loss account for the year ended 31st March 2022 and a balance sheet as on that date after making the necessary adjustment. So this is your trial balance and debit side, credit side. So following informations are given in the questions: trial balance, wages, drawings, debit side, plant and machinery, freehold property, purchase, salaries, office expenses 2750. Similarly, on credit side, capital account, return outward, this is to be deducted from the purchase goods returned to the supplier 1100, bills payable, sundry creditors, provision for doubtful debts 880, interest on loan to Kamal and sales amount 2,31,440. On debit side also having some more items. These are the items: sundry debtors, discount, office furniture, office expenses, sundry debtors, loan to Mr. Kamal at the rate of 10% per annum on 1st April 2021. It means that the loan amount given to Kamal 44,000 at the rate of 10% interest. So annually you will get interest amount 4,400 and it is your income, and here it is showing interest on loan to Kamal, that is 1,100. Only part amount received and the remaining part amount is accrued, not yet received, accrued. And cash at bank stock on 1st April 2021, this is your opening stock. And the next, postage and telegram, insurance, gas and fuel, then bad debts, freight, loose tools, factory lighting, cash in hand, factory lighting, cash in hand. This is the trial balance, cash in hand. Total of trial balance 5,12,820, 5,12,820, both side, debit side and credit side. And besides these questions, you have some adjustments also. This is an adjustments are given, necessary adjustments. What are the adjustments given in the questions? See here, adjustments. The stock on 31st/3/2022, that is the closing stock, was valued at 72,600. A new machine was installed during the year, costing rupees 15,400, but it was not recorded in the books as no payment was made for it. Wages rupees 1,100 paid for the erection have been debited to wages account, and depreciation informations are provided. Depreciate plant and machinery by 33 1/3%, furniture by 10%, freehold property by 6%. Loose tools were valued at rupees 1760 on 31st March 2022. Of the Sunday debtors, 660 are bad and should be written off. This is the new bad debts, further bad debts, and maintain a provision of 5% on Sunday debtors for doubtful debts. And the last point, adjustment. The manager is entitled to a commission of 10% of the net profit after charging such commission. So this is the questions of final account. Now with these questions we have to prepare trading account, profit and loss account, and balance sheet. Now I will show you one by one items, one by one solutions here. Trading account, profit and loss account, and balance sheet sales. This is the trading account. Opening stock, so we always write opening stock debit side, closing stock credit side. Okay, opening stock is given 38,500, and to purchase, so it is written out what it is given 1,100, so deduction 1,08,900, and buy sales it is given in the questions 2,31,440. Then wages 35,200, and in the adjustment it is given that wages for machine installation. So any expenditures incurred at the time of installation of machine, it is to be capitalized. That means this 1,100 shall be added to machine cost, not on wages. So it is debited to wages, means in 35,200 1,100 rupees is also included, but this 1,100 we should add to machine cost, because at the time of installation or setting up of new machine, any expenditures incurred, these expenditures are capitalized, means added to the cost of machine. In the given question, that 15,400 is the cost of machine, and for installation all these labor charges were paid 1,100, and this amount 1,100 will be added to cost of machine 15,400, and this amount we must deduct from here, from wages amount, and this amount we should add with cost of new machine. So it is shown. Later on you will find this on the working note. And gas and fuels trading account, freight trading account. So after deducting this 34,100, and gas and fuel directly given 2,970, and freight 2,900 amount given. Factory lighting 1,100, this is given in the questions, 1,100. Okay. Well, this 1100 amount factory lighting. So we have to understand that which expenses are to be debited to trading account first. Trading account expenses, in the trading account expenses which are direct expenses. Direct expenses including opening stock and closing stock. That is, goods purchased is the direct expenses, and any expenses incurred to bringing the goods to business place, that is also considered for the direct expenses. Wages, gas and fuel, these are the factory expenses, direct expenses, and factory lighting, direct expenses. Freight is paid to bringing the goods to business place, 2900, it is direct expenses, and all direct expenses we record in trading account. Similarly, sales, direct income, by selling of goods and closing stock, goods lying unsold, part of purchase remain unsold, 72,600. Now as per this question, these are the items we have to debit and credit in trading account. So this is the sum total of credit side is 3,04,040, and same amount you write on debit side, and the difference is gross profit CD and 1,15,570, and this is the by gross profit brought down 1,15,570. And now indirect expenses, all office expenses to run the business, to carry on the activities of business, certain expenses are required. So expenses are direct expenses which are manufacturing of expenses and purchasing expenses, and apart from this there are certain indirect expenses, and they are especially incurred to run the business smoothly, and somewhere these expenses are indirectly assisting to manufacturing or purchasing of goods for surviving of the business expenses. So like salary, office expenses, discount, postage, telegram, insurance, bad debts, these are indirect expenses. Gross profit brought down, interest on loan to Kamal 1,100, accrued, it is accrued is written because the loan was given on 1/4/21, then till 31st 3/22, 12 months interest. So 12 months interest is 4,400 because the loan amount is given 44,000. Loan amount is given 44,000 and a rate of interest is 10%. So 4,400. Out of 4,400 in the trial balance it is appearing 1,100. This 1,100 amount already received, and remaining 3,300 rupees is due, not yet received, accrued, due amount not yet received. So total amount of the whole year income in the name of interest is 4,400. So total 1 year interest amount we have to show, and in this way we calculate interest amount. And bad debts, further bad debts is given in the question, you have to write 660, 660 already in the trial balance. This is the amount already written off, and further bad debt 660 given in the question, and after adding this 660 plus 660 it is 1320, and a new provision for 1,430 rupees. This is you have to calculate on debtor balance. So debtor balance after deducting the further bad debt 660. and 2750 you will total. And this is an old provision given in the questions, provision for doubtful debts on the credit side of the trial balance. So this is an old provision. Deduct the balance, this is 1870, you have to debit to profit and loss account. And a loose tools is given in the trial balance 2200, and in adjustment it is given valued on 1760. That means the value of 2200 loose tools reduced to 1760, and 440 rupees is a decrease. So this is in depreciation. Market value decreased by 440 of loose tools. Loose tool, that is the tools were used in factory, jigs, mold. These are the depreciation on plant and machinery 35,750. This is in working notice there. So I will show you here this about this. How did you get this 35,750? And furniture is directly given at 10% of furniture. This 10% furniture, 10% depreciation is there. It is given in the question. So 5,500 is the value of furniture and 550 is the 10% depreciation. Next, depreciations we have to calculate on freehold property. It is given in the questions. Freehold property at the rate of 6%. So freehold property at the rate of 6%, and the value of freehold property is 66,000. So 66,000 6%. So if you calculate, you will get 3,960. And a very important question is that the manager's commission. So after deducting all the amount of debit side from the credit balance, total credit 1,19,970. The balance amount left, on that amount we have to calculate the manager's commission. Here I am showing you that how manager commission is calculated. This one, you see this. Net profit before commission. Total credit amount minus total debit amount. So on credit amount, total credit amount 1,19,970, and the total debit amount is 63,140. So this is the profit, 56,830. This is the profit, net profit before charging commission. Now out of this 56,830 you have to charge manager commission, and it is given that after charging such commission, whenever you see after charging such commission, then you have to apply this rate 10 by 100 plus 10. That is the rate by 100 plus rate. So 100 plus rate. So if it is a 20%, then it will be 20%. If it is a 10%, then it will be 10%. So 10 by 110. This 10 by 110 we use that whenever it is given in the question that after term. Sometimes you get here before. If it is a before, then simply 10 by 100. If it is mentioned in the question after, then simply you have to write 10 divided by 100 plus 10. And the result, this is 56,830 is your net profit before charging commission. So this is the 5,166, this commission amount here, and this is the commission amount calculated, this 5,166. And now 5,166, now you deduct all the debit side amount from the credit side, then you will get 51,664. This is your net profit transferred to capital account. So manager commission is calculated on net profit, and the net profit we calculate total credit amount minus total debit amount. The balance which is we get, this is a manager, this is the profit before charging manager commission. Now this is the profit becomes after charging manager commission. So this is the 5166 amount is deducted from the profit, and this profit became net profit after charging commission, 51,664, and this amount shall be added to capital account of the proprietor. And here the calculation of depreciation on plant and machinery. Depreciation on plant and machinery is this one. So on plant and machinery is given in the question is 99,000 on trial balance, 99,000. So 33 1/3 means 100 by 300 and 33,000. Now add additional depreciation on machine installed during the year. During the year, it is the date is not exactly specified. So the cost of the machine is 15,400 given in adjustment number 2. In the adjustment number 2 is given a new machine was installed during the year. Adjustment number 2 here it is given in the questions. This is the 15,400. A new machine was installed during the year costing 15,400, and wages, this is the wages. So this 15,400 plus 1,100 wages, it shall be added with this value 15,400. So then when you add it, so this is 16,500. This 16,500. And now this machine was established or installed during the year. A specified date is not given. So when the specified date is not given, a specific date, then we have to calculate the depreciation for half years. That is, this is the half years. Half years depreciation is calculated. Here it is given half year. When we apply this rule, when the date is not clearly specified in the question, during the year, when the during the year term is used, then we generally charge half year depreciation. So on this machine you have to calculate half year depreciation, but on these machines you have to calculate the whole year, the full year depreciation. You see that the full year depreciation, this one. So this amount and this amount total 35,750. This is your total depreciation on plant and machinery. This is we have calculated. Okay. Now when the machine or furniture purchased during the year, if it is given, then you charge the depreciation for half years, and half years either you can write 6/12 or 1/2. Okay. Manager's commission, it is shown already, explained to you. Trading account. Now in the balance sheet. Balance sheet is here. So capital account 2,28,800 and net profit 51,664. This is total. And drawings, it is in less amount given in the question. So when we deduct this, so 2,67,264. And manager's commission, it is charged on profit and loss account. From the net profit, the manager commission is payable. So this is the manager commission payable. You can write here also manager commissions payable. This is not yet given, it is payable, 5,166. And sundry creditors 44,000. Here the machine purchased, it is given in the question that machine purchase is in point number here. It is given that, but it was not recorded in the books as no payment was made. That means machine purchase for 15,400 rupees, it was neither recorded in the books of account nor any amount is paid. So that means it is a credit purchase, and when you purchase the credit, the sundry creditors balance will be increased with this equal amount 15,400, and this is the sundry creditors is added 15,400. Machine purchased, and total 44 plus 15,400 59,400, and bills payable it is given in the questions 5,500, right. And freehold premises, here freehold property depreciation is already calculated, so minus depreciation, and plant and machinery 1,15,500. This is a old machine and old plant and machinery plus new machine which is installed 16,500. So together it is shown here 99,000 plus 16,500, so it is 1,15,500. And total amount of depreciation 35,750 minus it 79,750. And office furniture, here it is an asset. This is office furniture minus depreciation. Loan to Kamal, loan is given to somebody. When loan is taken, it is a liability. When loan is given, it is an asset. So loan to Kamal 44,000, and 3,300 interest is not yet received, it is accrued. It is interest accrued. So this 3,300 added, so total 47,300. And a loose tool it is given in the adjustment that a loose tool was valued to 1,760. The difference is the depreciation, which is 440. We have shown in profit and loss account, loose tool. And sundry debtors, this is the 29,260 balance, and this is the adjustment. In adjustment it is given 660 further bad debts minus it. On this 28,600 you have to calculate the 5% provision. So when 28,600 you calculate the 5%, you will get 1,430 rupees. This is a new provision. It is given in the questions. This is a new provision given in the questions. So here you see adjustment number 5. This is of the sundry debtors 660 are bad and should be written off. This 660 further new bad debts. One bad debts is already in the trial balance, and this is another further bad debt. So new bad debt 660, and you have to maintain the 5% provision. This is a new provision, and this 5% provision is always calculated on the debtors after deducting the new further bad debts amount, if any. So here it is done, and this is the 29,260. So new further bad debts is deducted 660, and a balance 28,600. On this 28,600 you have to calculate 5% provision. So then you will get 1,430, and you minus it each one, and 27,170 is the debtors balance. And closing stock balance is given 72,600. Cash at bank is given asset, so cash in hand is given 12,500. So it's this way. So when you total it, the both side 3,37,330, 3,37,330 is your total balance sheet figures. Total balance sheet figure. Okay. Now you see in the provision for bad debts accounts, if you wish you can prepare in this manner also. And this is a working note number 3. Provision for bad debts you can prepare in this manner. Here the by balance BD, this is the balance BD you have to write from the trial balance. On the trial balance credit side, if you see for provision for doubtful debt, so then this is the 880, it will come from the trial balance always. And then bad debts, if it is given in the trial balance, you write down 660, and if new bad debts is given, even then again you write down this 660. Further bad debts, old bad debts, further bad debts, new bad debts, and this balance sheet is calculated on the debtors balance. This is the 1430, 1430, and this you have to write here. And total amount, total is 2750, and this is the 1870. This amount will appear in the profit and loss account debit side, because it is given here. You see the profit and loss account, profit and loss account. So 1870, this 1870 is in the profit and loss account. So if you prepare in this manner, so you will get this one. This is the profit and loss account. This one here, it is your provision for bad debts. So this one 1870. This is, so you can do in this way also. You can do in this way also, or you can do by with the help of this your ledger account, provision for bad debts account. This way also you can show it. This one here you can write, instead this portion we can prepare this way, but in the balance sheet you have to show in the same manner which is shown. Balance sheet you have to show in the same, this in this manner. This, okay. Thank you very much. So all of you practice it, write down in your copy and practice the problem, very important problem, final account. Okay, thank you.